The 7 levels of stock investors, from beginner to master. Let me tell you about 2 friends. They both started investing in the stock market the same year. Same salary, same savings, same opportunities. 10 years later, something strange happened. One of them quietly built a portfolio worth over $1 million. The other? He stopped investing completely, after losing most of his money. Same starting point, completely different outcome. So what went wrong? It turns out that most investors go through 7 levels of evolution, almost like levels in a video game. Each level changes the way you see the market. And once you understand these levels, you'll immediately recognize where you are and what it takes to move up. Level 1. The Gambler. This is where most investors begin. At this stage, the stock market feels like a casino. You open a trading app. Stocks are flashing green and red. Prices move every second. And suddenly, investing feels exciting. You hear things like, "Buy this stock before it explodes." Everyone is making money on this. Don't miss out. So you buy. No research, no strategy, just hype. A perfect example was the meme stock craze of 2021. Stocks like GameStop went from around $20 to over $400 in just a few weeks. Millions of new investors rushed in, hoping to get rich overnight. Some did, but many bought near the top and watched their money disappear. At level 1, decisions are driven by emotion, and the market punishes emotional investors very quickly. Level 2. The Trend Chaser. After losing money a few times, investors start paying attention to trends. Now the thinking changes. Instead of gambling randomly, they try to follow whatever industry is hot. Artificial intelligence, cryptocurrency, electric vehicles, green energy. Whatever dominates the headlines. This feels smarter. But the problem is the same. Trends attract attention after prices have already exploded. History is full of examples. In the late 1990s, investors did this with internet companies. If a company had .com in its name, people poured money into it. Many of those companies had no profits. Some didn't even have real products. But the hype pushed prices higher and higher. Then the .com crash of 2000 wiped out trillions of dollars. Trend chasing feels logical. But when everyone is excited about the same thing, the opportunity may already be gone. Level 3. The News Reactor. At this level, investors start taking things more seriously. They watch financial news. They follow interest rate announcements. They track company earnings. Every headline feels like a signal. A company reports strong earnings? Buy. A recession warning appears? Sell. But there's a problem. By the time news reaches you, the market has already reacted. Professional investors and institutions often move long before headlines appear, which means reacting to news usually puts you one step behind. This stage feels more sophisticated than gambling or trend chasing, but it still isn't true investing. Level 4. The Student. This is where the real transformation begins. The investor stops asking, "What stock should I buy?" and starts asking, "What business am I buying?" They begin studying how companies actually work. Revenue growth, profit margins, competitive advantages, industry dynamics. At this stage, many investors discover legendary thinkers like Warren Buffett, Benjamin Graham, Charlie Munger, and they realize something important. Stocks are not just numbers on a screen. They represent real businesses with real customers and real products. Once you see investing this way, everything changes. Level 5. The Strategist. At this level, the investor finally develops a system. Instead of random decisions, they follow a clear strategy. Some choose value investing, searching for companies that are undervalued. Others prefer growth investing, focusing on businesses expanding rapidly. Some build portfolios centered around dividend income. The specific strategy matters less than the discipline behind it. Because now, the investor understands three critical questions. Why am I buying this stock? When should I buy it? And under what conditions would I sell it? Investing stops feeling chaotic. It becomes intentional. Level 6. The long-term builder. At this level, investors fully understand one of the most powerful forces in finance: compounding. Compounding happens when investment returns start generating their own returns. Over time, the effect becomes extraordinary. Take Warren Buffett. He is one of the richest investors in history. But here's the surprising part. Most of his wealth came after age 60. Not because he suddenly became smarter, but because his investments had decades to compound. Long-term investors stop trying to outsmart the market every week. Instead, they focus on great businesses, consistent investing, long-time horizons. Patience becomes their biggest advantage. Level 7. The Master Investor. The final level is surprisingly quiet. Master investors are not chasing excitement. They are managing risk. They understand that the biggest danger in investing isn't market volatility. It's human behavior. Fear makes people sell too early. Greed makes people buy too late. Master investors design systems that protect them from those emotions. They diversify their investments. They ignore daily noise. They think in decades, not days. And because of that discipline, their wealth grows steadily over time. Final insight. Here's the truth. Most investors never move past the early levels. They remain stuck chasing trends, reacting to headlines, or gambling on hype. But the investors who quietly build real wealth do something different. They evolve. They study. They develop strategies. And most importantly, they stay patient long enough for compounding to work. Because in the stock market, success doesn't belong to the fastest trader. It belongs to the most disciplined thinker. Now, here's something I'm curious about. Which level do you think you're currently on? Are you still exploring the early stages? Or have you already moved into strategy and long-term investing? Let us know in the comments. If you want to understand money, markets, and investing at a deeper level, subscribe to TMAStreet. Here we break down the ideas behind wealth so you can make smarter financial decisions.